All right, so welcome to the Indian markets review for 25th October. Diwali just got over. Some of us are still in the Diwali spirit, of course. And as usual, every year we have our traditional, Muhurath picks going on all over the media. All of us wondering how the next year will be. And traditionally, this is the new accounting year from a Diwali perspective. Uh, so what we plan to do today is the first part is look at our usual sector indices to give us a good idea of how each of the sectors are doing, and then we will depart from what we normally do, which is either look at all the 50 Nifty stocks or the 50 Nifty junior stocks, when we look at a mixed bunch which has been sent in by a couple of folks. We plan to keep this for about 2 hours, but be prepared for it to go longer. And if there are any very specific stocks that you are very interested in, just put it in the chat box, and hopefully we should have the time to review them all and have everyone happy. All right. So welcome you to the session. I hope it's going to be useful, educative, and we'll find some profitable stuff. Okay, so before we start, a quick global review. There have been various concerns going around. Of course, the biggest surprise locally was diesel decontrol, right? Which in the previous Indian market review that we did last weekend, I had said that it probably may not happen, and I'm wrong on that. It happened. Everybody's surprised, including myself. If the government really sticks to it, which I think it will, then that's really a big plus. It reduces the subsidy burden on the government, the fiscal deficit improves, the currency should improve over a period of time, and gives the government a lot more breathing space. So that's a big plus, and hopefully the population and all us diesel users should now just be used to diesel and petrol prices going up and down with the international markets. Of course, one thing to remember is that this was done in 2002 during the Vajpayee government, and in the last year of the NDA regime, control of fuel products was actually brought back in because the international crude oil prices just went haywire. So you never know, but at this point, good news definitely for the country. The coal ordinance, very good news. It's not really a privatization of the sector as some people have tried to explain it. It's just a deregulation. The coal blocks will still be owned by the government. They'll just be licensed out as far as I can figure out. And in the next 4 months, we're going to see e-auctions. Some of the state governments would benefit tremendously from this, especially Chhattisgarh, I think, and Bihar, which have high coal reserves, because the money from the e-auction is mostly going to go to the state governments. But all said and done, the more important thing will be private sector in, great incentives for them to now mine. And I don't know if any of you noticed that there was a statement made that the coal stocks in the power plants in India were the lowest in the last 25 years. That's a very, very unhealthy situation. And if, of course, we can't expect a overnight correction of this with this coal announcement, but yeah, it's the right step. It's in the right direction and does well for the energy security for the years ahead. So that's definitely another big plus as far as the coal ordinance is concerned. Apart from that, I don't know if I'm missing anything locally. If I am, please feel free to add in. On the global side, you now have Ebola in New York, and 2 states there have increased surveillance. This is definitely not good news. The Americans tend to be, oh yeah, I totally forgot. Thank you for that, Balki. The Maharashtra and Haryana elections, decisive victory in Haryana for the BJP, and in Maharashtra they've put Shiv Sena in their place, as the media says it, and the BJP is definitely going to have the upper hand. There's no doubt about that. Some more elections coming up, I think, in Jammu and Kashmir and other places. But yes, the thing is the decisive mandate that has happened, and the question of whether this now really translates into better, faster reforms That of course time will tell, but good, we don't have a fractured mandate. The country definitely needs something decisive and in the right direction. So should give Modi a lot more credibility, a lot more power, a lot more say in getting things done, and definitely look forward to that. So the elections are definitely good for the country overall, the election results. Going back to the global scenario, we have like I said, Ebola in New York. We don't know how that could span out. There's another news about a girl in Mali who traveled across the country before she was diagnosed in a local bus, like our state red transport buses, and God knows what the infection could have, the transmission could have happened there. So the Ebola threat is now real, expanding. So even though we've got a couple of countries which the WHO says are now Ebola free, the problem is not to be taken lightly. It's not to be forgotten, and especially of you those who travel internationally, and some of you on the chat, I know you do. There's no what would I say? No need to go hiding, but one should review, I think, travel and exposure issues in perhaps the coming weeks and months. This, in my opinion, is going to get worse before it gets better. All right, by far it's not contained. I'm saying this more from a medical perspective rather than anything else. Okay, so that, and the other big issue is, of course, crude oil prices coming down, and at around $85 to $82 a barrel. Definitely good news. Whether they stay there or they go down further, tough to say. Cold season, winter coming up, probably started in a couple of northern countries already, and that could mean that crude oil doesn't really go down much further. Indeed, it may actually go up, and we'll just have to wait and see about how that happens. I've been reading this book, very interesting. Highly recommend that some of you read it, Investment Biker by Jim Rogers, the famed commodity trader. I've had the book for years, but finally reading it, regret not having read it earlier. But he talks a lot about supply and demand, and just connecting to this supply and demand issues, and how no government or no power on earth can actually alter that fundamental law of physics, economics. And he says, just stop interfering in it, and wherever that law freely functions, you're going to have the best economies, the best societies, and the best stability. So why am I talking about supply and demand as far as crude oil is concerned? Well, at $82, $85 a barrel, it's at a critical point where it's a well-known fact that shale oil, to be extracted and made profitable, the price of crude oil in the international markets has to be $80 per barrel and above. Otherwise, it is economically unviable. So shale gas, which has been a big news for at least 2-3 years now, is something that could go out of the market, and therefore supply gets curtailed. Prices are down. No further shale oil developments happen in the next few months and years, and you get crude oil prices going back up simply because supply is less. Just some long-term things to keep in mind, and not to get too excited about crude oil being down. It could just bounce back up. You never know. All right. Anything else on the global scene? Anyone? Oh, crude oil. Very interesting that ISIS earns $1 million per day from crude oil sales from the refineries they control in Syria and Iraq, apparently the richest terrorist group now. That's not good. That's a lot of money, at least $360 million per year, just free money for them. So ISIS, of course, is a lingering problem at least. Okay, so Srinivasan is talking about the terrorist problem in Canada. Sid, can you send that link again, please? I mean, I'd really like to put it up on the Twitter link. Okay, so the Canada thing, I haven't read too much of it in depth, but whatever little I've seen, it was one person who apparently acted alone, wanted to go to Syria, for some reason could not, and was very frustrated out of that, and therefore went on this apparent rampage. So I think looks like more to me general reading, and if you look at the Canadian media, an isolated case. Of course, now there is heightened awareness and concern about who else could be like this within the country, and about Canada being a place where such acts could happen a lot more. But all right, so let me just bring this up. Where is chat? Okay. Okay, I just put up a link once it comes. Yeah. Okay, so this is a link sent by Siddharth. I thought it was, very, very telling about how US media versus Canadian public news talked about the attack. Let me see if I can make it bigger. Okay, so I hope you can all see it, right? CNN on the left and CBC News, some public broadcast on the right. On the left, all sensationalism, and on the right, a very factual statement. And typically how America is and how American media is versus Canadian media is, and how things are being blown up in the West, or I shouldn't say the West now, in America, and how, fear mongering basically. So, thank you very much, Sid, for this. And I think this gives you a real perspective of whether the attack in Canada is really of concern. I think at this point, not too much. There was a very nice story that I read just today afternoon. I don't have the link, sorry, about how some mosques got defaced in Canada after this, and how the people in those various communities actually rallied around to go get them repaired and make everybody feel that it's all part of the community, and this terrorist thing is an isolated thing. So I think Canada has definitely got their head, Canadians rather, have their head on their shoulders. The rest of North America, the Americans, well, that's a different story. Anyway, so that's so the Canada thing I don't think is really an issue. Of course, there is a call by ISIS to attack Western anything. We'll have to see. So we'll just leave it at ISIS at this point. Balki talked about Germany in possible recession. Yeah, I think this is definitely a concern. There is a meeting of the European Commission going on, if I understand correctly, on trying to figure out what the hell to do basically. The interest rates are at life lows. What else can you do? What do you pump in money for? How do you make the economy grow? I think sort of running out of answers. And if Germany goes into recession, then what are the ramifications on Europe and on the rest of the world? Just for US to drag the world out of the recession, I don't think that's possible. And in today's news, there was this thing about China, right, cooling off, China's economy cooling off. This was in the Business Standard. So I think we're seeing a lot of concerns on the global economy which have definitely not disappeared. And the question really becomes that whatever recovery that we have seen in the last 1-2 years, whatever good news is perhaps coming out of America basically, how long will this last, and are we now into more uncertain times going forward? So I think these are long-term trends. These are not things that are going to disappear in the next week or next month. It will probably linger on for the next 6 months, a year, probably more. And therefore, we have this issues that we really need to keep. Yeah, the reason I'm spending so much time on this, and forgive me if I'm boring anyone, is that we tend to forget these long-term trends, and we're so focused on, oh, this stock is going up, that stock is going down, and we all have this 1 day, 1 week perspective, and we're just missing out on various threshold events or tipping events that could happen, and they're happening, and just that we don't seem to be talking about them or being aware of them. Lingraj has sent a comment saying, run up to the climate change conference in Paris, December 2015, where a legally binding agreement on climate change is supposed to be linked. Well, I think if you look at the history of climate change agreements, and especially the big one which was trounced as, oh yeah, we've sort of, not solved the problem, but we are on top of it, was the Kyoto Protocol several years back. And you know what, if you look at the Kyoto Protocol, it just basically is a piece of rubbish paper today. How many countries are following it, how many countries have implemented what they signed up to, etc. Yeah, another attempt at it, but I think on the issue of climate change, I don't see, listen, my view is this, on climate change, I think the big issue now is going to be, okay, yeah, we've got climate change problems and we've got disappearing glaciers and all that stuff, but we also have our economy just going to shreds. We've got unemployment in some places at lifetime high levels. We've got a generation going down the drain. We don't know what to do with them. We don't know how to get jobs back. So what are we going to pay attention to? Are we going to sort of clamp down on the economy because, or let me rephrase this, if we take any steps towards reduced greenhouse gases or whatever it is in the climate change thing, and those steps lead to curtailment of economic growth, then will those environmental steps be taken, or will people just sign up to say, and then, you know what, fine, great conference, let's go back and just do business as usual? I think if you look at human history, economics has always triumphed anything else. If climate change is going to work, it has got to be something that makes that also creates jobs, that also creates prosperity, that also creates a viable, positive global outlook for all parties concerned. Without that, I really am very skeptical about that happening. So thank you for bringing it up, but I think really the focus is really going to be on the economy. It's like, I don't know who said that, it's the economy stupid, Ronald Reagan or somebody. Yeah, yep, it's true. Okay, all right, so that's it. Any other issues that anyone has in mind? Any global issues, local issues, or anything? All right, so I think on balance, as we can see, we are, I would say, I mean, let's take a poll on this. My thing is, I think we are at a sort of 50-50 point at best with all these long-term trends globally, especially locally in India. Of course, things are looking really much better, but the global headwinds are something that we can't ignore. Oh yeah, just a minor blip right now, the Hong Kong protests. Right? How will China deal with it? Are they going to, really clamp down like Tiananmen, which I don't think they will do? But then how do you deal with the pro-democracy thing in Hong Kong? It doesn't seem to be going away, and it looks like the Chinese really don't know how to deal with it in an effective manner. So you're having negotiations but no outcome, and you never know. I mean, this could just end with a massacre, or there could be something. If China, let's say, backs down and say, yes, we'll actually do full democracy in Hong Kong, I mean, that will be a big loss of face for them, and very unlikely that they're going to do that. So yeah, I think these are the things that are there. Anyone has any other issues? Okay, so I think my view is, and please let's have a debate on this. If you have a different view, please let's flash it out. So while locally things are looking good in India, and the political economy is definitely on an upswing. Oh yeah, we should add this. FM asks for rate cuts. Right, so this is coming directly from the government to the RBI saying, look, cut the rates, inflation has come down, or let's put that also. And with the diesel decontrol, or at least the reduction in price of diesel, there should be some more reduction in inflation in the next few weeks. So locally we are seeming to get more and more good news, but globally I think the headwinds are there. And this issue of European recession and Ebola is something that, and of course China's economy, are things that sort of balance the optimism, I think, that is there on our ground. So with that, I would say that I would be bullish in the coming few weeks and months on Indian stocks, on the Indian equity markets. And if RBI does actually start a reduction in interest rates, remember that interest rates increase, decrease are not just one-off issues. If the RBI does start that, maybe not this year, but next year, then it is usually the start of a series of rate cuts. And those will go on, could go on for several weeks, several months, at least maybe 4 to 8 quarters. And then if we are going into a decreasing interest rate cycle, that's going to be a big kicker for the Indian economy, right? So that's something that you have to look out for in the weeks ahead on RBI policy. That's something we will keep reviewing in the India markets review as we, look at the changing dynamic situation. All right, so that's the thing to watch out for, RBI policy going ahead. Apart from that, can't think of anything else. All right, okay, done. So the next step is what we do is we start looking at the indices. So let's start with the Nifty itself, and I'm not sure out of all the folks here on the webinar today, how many are familiar with technical analysis. So I'll just try and keep this a little simple. So let me just change the format 1 second. Where is that? All right. So this is the Nifty index right from 1990 rather. I'm just putting it on the weekly chart, just zooming into the more recent thing. So we have been making life highs. So after breaking out of this triple top in 2014 and on very, very good volumes, the market's just been going up, as you can see, except of course for the last several weeks. And the last part of the rise after jumping up, this part, I think good consolidation on lower volumes, and again a rise again on good volumes. Just to make sure everybody's on the same page, this is a weekly chart, this is not a daily chart, okay? And so gone up on good volumes here, okay? And then consolidation on low volumes, again a rise here on good volumes, and then you have a fall on much lower volume. So all of us who are aware of Doe theory know that this is a good sign, going up on good volumes and going down on lower volumes, and essentially you have a multi-month uptrend that is going on, with this being the life high as of now, or approximately that. So in the last week, or in the week that has just gone by, it clearly looks like the 4-week downtrend is over. I'll go back to daily charts in a moment, and we now again have a good positive week. However, not much on the volumes, but remember that Thursday, Friday were basically holidays, so the volumes would naturally be much lower. So here is the daily chart, and we definitely have lots of windows and gaps that have taken the market up, partly because of global factors and partly because of local factors. There was a good news on the American economy side, on the housing start side, and there was of course the diesel decontrol, and we forgot on the discussion, the increase in gas price, right? The private companies have been complaining about the price at some $4 something per BTU not being viable. Now it is 30% higher, not as high as $8 that was initially asked for, but that's good, and that should do well for again the energy security. So those two issues boosted the market here, plus the global issues. So now we are heading back up. Looks like again, by the way, if you look at this level here, lots of price action in the past, in a few months around that zone. So a natural support zone which was there, from which the market has bounced, but as you can see, very, very not increasing volume so far. So that's actually not good news, that the volumes have not increased on this bounce. So 8,150, 8,175 on the Nifty is a level that we need to really look out for. And on the downside, I think 7,750, 7,800 is a level to watch for. Lower down around 7.5 is where, if this up move doesn't sustain, if volumes don't pick up next week, clearly you can see that the volumes are poor this week. If this 8150 doesn't get taken out, you already have a double top here, okay, both in September, first week and third week. If this double top doesn't get taken out and we come back to 7750, which seems to be the likely scenario right now because of low volume, so this is obviously subject to change. Views can change at any time with global events and with changing trading patterns. We could come back to 7750, and if that breaks, then 7500 is definitely a possibility. So that's the view on the Nifty. Just going back to the little more complicated chart that we have. Sorry, let me close this. Right, so this one has a lot of indicators. If you don't understand these lines, it's okay, don't bother, perfectly fine. So the indicators are definitely showing some strength in the short term. You have an MACD crossover, but remember it's in the negative zone. You have RSI going back above 50, but we still need some more strength on it. And the stochastic here is the really short term, so I wouldn't really read too much into it. So yes, we could expect a move to perhaps 8175, 8200, and then we'll really have to review what is there. And of course, as far as windows and all that are concerned, for this window to be broken, to be closed, and this window to be closed, the markets will have to come back to 7,700, or the gaps to be closed, 7,700. So we're going to look at perhaps another 300 point fall, or it goes to around 8.2 and then it comes back to maybe close this window. So that's the view right now, and like I said, things can change. All right, let me just take a moment. I know this is going to perhaps be a little repetitive for the regulars, but since there are a lot of new folks today, if you watch I had his name and I slipped. Who's our big bull, yeah, of India? This is really terrible. Yeah, thank you, Rakesh Jhunjhunwala. Thank you, Srinivasan. If you watch his interviews, at the end of the interview, he'll say, "I have the right to be wrong." It used to infuriate me in the earlier. What you talk to this guy for half an hour, and then he says, "I have the right to be wrong." He just like sort of negates almost everything that he has said for 29 minutes, and on the last minute, say, "I'll have the right to be wrong." It really took a while to really understand the wisdom behind it. Yep, he knew what he was saying, that's for sure. Let's give it to him. We are all bachas in front of him. And what I understand is this, event risk, anything happening in the world somewhere, policy decisions being taken by the government, some environmental event that happens, or some terrorist event that happens, could just completely change the fortunes of a stock, a sector, or a market itself. And these are things that you really can't predict. It's impossible to know everything. You just have to take the best of what you can put your hands on, get your hand around it, or rather get your head around it, and take the best guess. And that's where risk really is, and you've got to really understand that there are absolutely zero guarantees of absolutely making money. You do your best, you do your TA, you do your FA, you do your political, you do your environmental, economic, whatever you want, and then take the plunge. You put your stop loss, and that's it. And you keep reviewing. That's a very important thing. You review, you update, you review, you update, and you do this over and over again. There is absolutely no end to this. As long as you're going to be in the market, and if something changes, you change. You change your opinion, you change your view, you change your holding, you either exit or you add more, whatever it is. So as the markets give you more input, and tomorrow will be another day, day after will be another day, ad nauseum, you have to keep adapting to what happens. Being stuck with an opinion, being stuck with a view, being stuck and saying, oh, this is a stock that's really going to do well, that's a straight line to, if not bankruptcy, to definitely unhappiness, I would say, because then you get stuck and say, oh no, this stock should do well, while it's not doing well, and what is doing well, you're not looking at it because you refuse to believe that things can change. So that's one thing that markets have really deeply taught me, that in anything in life, absolutely anything without any exceptions, change is inevitable. You've got to embrace it, and you've just got to go in your stride. If you don't accept change, and if you don't accept whatever the markets are going to change or things in your life, then, well, you're just going to be left behind at the very least. At the very worst, you'll get bulldozed over. You'll be just another account number which closed down, and that's it. So sorry for the digression, but I really hope we all take this seriously, because I still think, after many years in the market, some of us still tend to get stuck on a particular view on a particular sector. So, just to talk about today's title, Muhurath picks. Sure, these are our picks or discussions that we are having today, but these could dramatically change tomorrow, or 1 week, 1 month, 6 months later, with whatever happens in the market, right? So please, really beg you, keep that at the back of your mind. Be prepared to jump out of anything you jumped in right yesterday or right today, because you got some new news and you have to jump out. You've got to differentiate between you as a person having an opinion versus the opinion itself. The opinion is not you. The opinion is wrong does not make you wrong. The opinion is right does not make you great, right? You neither become a saint nor do you become a pauper because you change your opinion, right? You've got to separate that, right? So that's it. I'll leave it at that, because please don't at the end of today's session say, okay, these were the great stocks that we discussed and these were the really ones, and you invest in them for a year and close your eyes, and after a year, who knows? Keep reviewing them. Whether you join the IMR or not, it doesn't really matter. You need to stay on top of change. You've got to be dynamic, right? Okay, so those were the views on the Nifty. So just to recap, could go back to 81.75, but with the low volume that you're seeing this week, but that's again because of the holidays. If those volumes don't pick up in the next week and all that, then quite possible that we get a triple top here, and then perhaps we come back to 7600, and if we break that, sorry, we come back to 7750, and if we break that, then 7500 is a distinct possibility, right? Okay, now let's look at the individual sectors and look at which sectors are doing well and which sectors are not too good. So we'll start with the Bank Nifty, right? So in the last IMR last week, we said there was one statement, simple, which was like, just buy banks, right? So those of you who were in it, I don't know how many of you acted on it. Let me see if I can, 1 second. Just need to save the file. Alright, so I hope you can see this. This is actually last week's notes, alright? And there was only one thing we said at the end of last week, which was this, right? Banks, just go out and buy them. So this was exactly 1 week back, or rather 8 days back, and you have the evidence here of, so let me just go back to today's, right? Otherwise you're going to get confused. Alright, so where did that go? Right, I'll get it back. So here is today's chart with the Bank Nifty, and as you can see, it's the banks are up, right? So the Bank Nifty is up. 1 second, just looking for a file. All right. And the bank nifty has actually made a new life high, which means that definitely some banks have made life highs. And if you look at it technically, the bank nifty technically is actually looking much healthier than the nifty itself. So as a group, the banking stocks are definitely doing a better job than the non-bank stocks. Doesn't mean all of them are doing well, but definitely I think this is one sector where the action is. And going back to our discussion, if inflation remains low, which I think it's likely to, and if RBI now starts to talk about reduced interest rates, at least you're definitely going to see the banks do much better. Oh yeah, let me add one more point on this banking thing, is that the PM is going to meet heads of banks and ask them to give more credit. All right. Now, Modi having the reputation that he has, at least the public sector banks are not going to take this as, oh, just another talk. They're definitely going to act on it. So this, of course, if they are lax about it, will increase NPAs. But you know what? That's going to be a problem 1 to 5 years later. For now, it is very possible that the banking sector could be it's a little too early to say let's do all the sectors, but it just really could be the leading sector for the next several weeks and months going forward. So the focus, if I think you would be, if nothing else, just keeping your focus on the banks and keeping your money in the banking stocks in the coming quarter at least, or since you're talking about Muhurath trading till next Diwali, will I think serve you quite well, right? So do think about it, and let's look at the banks a little more closely in this IMR. All right. So there is what next for the bank nifty? Well, as you can see, it's been consolidating sideways for since May, so almost 6 months, and now has actually broken out. Really no target for it, but yeah, 17,500, 20,000 on the bank nifty just seems to be the next natural target for the bank nifty. On just going to weekly charts on the longer term basis, you can see that we had a fantastic run up from 10,000 levels in February this year to 15,000. That's like a good 50% return in 4-5 months. That's fantastic on the banking side. We now have a consolidation for 6 months, and then perhaps the start of another move. There is no technical basis to say this, so I'm just sticking my neck out wildly. Maybe another, who knows, few thousand points move on the bank nifty up is definitely possible on the cards, right? Okay, Srinivasan is asking, is there any positive impact also from India joining China in the Asian Industrial Infrastructure Bank? Well, the Asian Infrastructure Bank is something which is still in the works. It's actually going to materialize only next year, and by the time the money comes out from there and helps individual countries, it will probably be end of next year, maybe 2016. So I think really no direct impact on any of the Indian banks that way. You must also remember that these are all sort of developmental banks with a political agenda behind it, and it will be sort of now a competitor to the Asian Development Bank, which is backed by Japan and America. The ADB chairman actually quite openly said, I welcome the Asian Infrastructure Bank, but I don't like it. That was an open public statement. Can't get more honest than that, I think. So no, these are all sectoral loans or infrastructure loans given for multiple years to states, to countries, and to the banking sector. They're not giving money to another bank, right? So it's not like a central bank. So I don't think there's any plus or minus of India joining the Asian Infrastructure Bank, right? Okay, so I hope that answers the question. So coming back to the bank nifty, I think a couple of thousand points uptick on the bank nifty. Again, let's be very clear about this from a 6-month to 1-year perspective, right? So I think I should put this here right now because it's inevitable that I think folks are really going, the psychological thing about us is that we talk about putting up a target and we think it's going to happen tomorrow, right? It's not going to happen tomorrow. So let me put it right up here. 6 to 12 months perspective is what we are talking about here in this IMR, right? So each IMR maybe different time perspectives. So 6 months to 12 months. Please, please, please don't forget that. Okay. So Bank Nifty could easily go up. So here's something that again sticking my neck out and saying, for those of you who are the FNO pundits, futures and options, if you really have the courage, then well, I think you're sitting on a potential multi-bagger return on the Bank Nifty itself. Forget about individual banks, wherein you go long on the Bank Nifty. At what level is of course something that we can all have various debates about, but so there's this window that needs to be closed, but it's extremely unlikely that the Bank Nifty I think now is going to go below 15,000, right? So from a 6-month 1-year perspective, unless some of course global event happens, 15,000 seems to be the worst case scenario for now. And on the top side, 2,000, 3,000, 5,000 points 6 to 12 months from now. So you're talking about, let's say, 3 to 5,000 points up. You're talking about 1,000, 1,500 points down. Now you do the math, FNO side, and for others, maybe you just go by the Bank Nifty Bs, right? So query the place to be in. Right, so that's a big query, long futures or at least Bank Nifty Bs, right? Not to be confused with Bank Nifty Bs, please, right? Bank Nifty Bs, just go buy them in the spot. Okay, so I think that's something that you should look forward to. As a trader, of course, 16,000 or rather 15,950 for this window to be closed is something that you have to keep in mind. Okay, next, BSE Power. So this has been one of those places where the promoters are probably regretting being in. It's really been horrible for them. Of course, they've had a nice run up from the lows of 1,300 to 2,500, and then now excellent support on the 200-day exponential moving average, a double triple bottom sort of, and then an attempt to go back up. So for those of us who like underdogs, underdog sectors, we are like just say personality wise driven towards favoring the underdogs. The power sector is a place where a lot of reforms are expected. Remember the coal ordinance, and definitely a good place, and it is quite possible again from a 6 month 1 year or 3-year perspective that the coal or the energy sector, the power sector could actually perform extremely well in the quarters and the years ahead. So I think we are now into a sort of secular uptrend on the power sector. Please note that this downtrend has clearly been broken. So we seem to have a sort of secondary correction that happened in the power index, and of course this is only from 2011, so that's a limitation, but the multi-year downtrend is over. We've got clear secondary higher tops and higher bottoms, and for long-term investors this definitely bodes well. So the power sector might be actually a good place to get into. It's not too far from the 200-day moving average, which was just tested a few weeks back from 1950 to 2100. It's not a great run up, and it could easily go back to 2400 and then 2800. So from even where it is right now, we're talking about a 20-40% return. But again, remember this only from 2011. The index, the sector itself would do much better. Okay, so power sector as an underdog, good. Realty, okay, so that's really taken a big hit, of course, with DLF. And here is a good lesson on why you should always monitor your stocks. So this is from 2008 onwards, when the index was launched at the end of 2007. Index at that time was around 13,700. Even today we are at 1,400. That means 90% of your wealth would have disappeared had you not managed your investments. This is why there is nothing like, sleep and forget in the market. Some sectors do extremely well, like you just saw in the bank nifty, right? And some sectors 5 years later are still, crushing you. And then if you add the impact of inflation on your investments, you're dead basically, right? You can't recover from something like this, right? So anyhow, so reality index, big huge beating. Of course DLF is the big heavyweight on this, and we all know what's been happening with DLF recently. I won't go into that, but DLF seems to have stabilized for now, and you can see that impact on the reality index itself. So it's definitely something that will benefit going forward, especially since this multi-year downtrend is broken. Sort of this, extremely important multi-year support being tested. That's where it has bounced up from, as you can see as I zoom in. So from a 6-month, 1-year perspective, you definitely could consider buying it, given that excellent supports are there. But I think that it's going to take a lot of patience to make money in this. The economic headwinds are still pretty bad. Real estate prices are still pretty high. A lot of places are quite unaffordable. Houses are becoming smaller. People don't like that. Of course, interest rate, when it comes down, is going to be a kicker for the realty sector overall. But you need a drop of 1 to 2% for things to be meaningful. But that could happen in the next 1 year. So realty, probably, let me put it this way, won't probably go much lower than this. So from a technical bottom fishing perspective, this is a sector you could definitely look at, but do not expect returns to happen as quickly as let's say the bank stocks that we have seen. It's going to lag that. If we need a little more reforms, we need land reforms, we need a lot of other reforms to happen, and if that happens, I think it's a question of when, not if. When that happens, that will be the time to get into reality from a multi-month, multi-year perspective. Right now, I think your money should be in some other sector. Okay, so how did I come here so fast? Okay, whatever. Okay, so CNX IT, the IT index is something which has made recent life highs. So again, like the bank nifty, the CNX IT is another place that you should really look at. Really doing well, as you can see, made new life highs, corrected, but has really not jumped up again. Partly due to the disappointing results last quarter or last week for the last quarter by I think TCS and I don't know who else. But these are all short-term blips. IT should probably, it seems to be on a recovery path, but the big issue with IT, I think, will be the global recession that could come back in again. The big issue with the TCS result was that they did not meet the dollar guidance, which means that they were having difficulty with their revenues and profitability in terms of big contracts on that side. Whether that's a sign of things to come or not, we don't know. On the other hand, Infosys, of course, did well. So it's a mixed bag, but definitely IT is definitely a place you could keep looking at. Okay, why did this get mixed up? All right. So now we have the auto, and that's actually been a surprise for me and others, I think, on the IMR for the last few quarters. Auto has done really well. So on the one hand, we say India is not doing well, the economy is not doing well. Of course, now it's reviving, but the auto index has just zoomed from last year sometime at around 12,000 to now 18,000. That's a fantastic 50% return. And you know what? No signs of this tiring out at all. The auto index is on a run. This is now a weekly chart. Corrections are happening. These are the sort of corrections you want when you have a nice secular long-term trend. And this is a very healthy candle that you're seeing for this week. The MACD is very, very bullish, which is a sort of mixed bag. Do you want to get into things when things are very bullish, or do you want to get into things like when they have cooled off a bit? Just on the issue of MACD, please note it's at a life high. Of course, for those of us who know about normalization of MACD, if you normalize this, then it probably not look that attractive. But still, that's a point to keep in mind, that the index has done extremely well. And uh, one thing that you should be clear is that any correction in autos should be used for buying. There is absolutely no question of getting out of it from a long-term perspective. Consumer durables, I'm going to skip this because we don't really look at many stocks. Next is capital goods. So this is the capital goods index. Okay, so wow. This is, let me just zoom in a bit. So this is from 2007 when it hit the peak, much before the 2008 peak of the overall market, and then has actually one of those indices like power, like realty, which has definitely not gone back to its life high. With the revival of the economy, capital goods are definitely going to improve, and we most certainly have a sort of good level here around 14,000. So we could say for the last 3 months it's gone sideways, and once it breaks 15,500, then 16,500 is a distinct possibility on the capital goods index. Not all of the companies would probably do well, but definitely if you're looking at playing the infrastructure revival story in India, which I think we need a lot more evidence of, because nothing has taken off on the NHAI. No new projects, as far as I know, have really been announced. Having said that, there's of course the coal decontrol. Remember, 4 months for the whole process to get over, then the bidders get their licenses, then they start their work. So maybe 3 to 6 months down the line is when you should start looking at infrastructure companies, especially related to the coal side. So those of us who are looking for thematic approaches, I think we should start hunting up coal related or coal linked stocks, ancillary companies, directly involved companies, because those could really be big jumps in the for the next 1 year. So as a theme, given that we right now have something, I would definitely say coal is something you should add to your list, right? Which other stocks that needs further a lot more work. Okay, so capital goods unlikely to go down, good upside possible. Could start looking at buying select capital goods stocks. FMCG making new life highs, sort of double top between last year and now at around 8,000. It's had a multi-year run up. So again, to demonstrate, if you were tracking stocks on the long term, from 2009 to now, this thing has gone from about 2,000 or even 1,800 to 8,000. That's like a 5-bagger on just the large cap companies in FMCG. Okay, and in the last 1.5 years, this part, it's gone sideways. That's a consolidation, and now you have a breakout, and the long-term trend line has been tested. It's going back up again. So FMCG is definitely looking healthy and should ideally continue to perform well. But FMCG is a defensive sector, and if the overall economy picks up, FMCG would probably not do as well as the other sectors like Bank Nifty or autos or even capital goods. Right, so FMCG is still a buy, it's still healthy, but relatively speaking may not perform going forward as well as it has. Okay, so next is healthcare. It's done a fantastic run up, especially the move from the middle of this year from 11,000 to 14,000, not vertical but almost vertical. Some amazing moves by a sector, 40% returns. Unfortunate that a lot of these sectors don't have products that we can trade on directly. Neither are there ETFs nor are there futures and options. Otherwise, it would have been a wonderful thing. What's to note in healthcare is that it seems to be coming out of a consolidation. If you get this MACD crossover, which looks like it's going to happen, then the next sort of move for at least a few weeks should happen, and healthcare could be a trader's pick more than a investor's pick. going forward. There is a court case going on between pharma companies and the central government about a drug pricing order. Most probably that order will be revoked, and that will be another small kicker. But like I said in last week's IMR, a lot of the revenues for Indian healthcare is now coming from the US and Europe rather than domestic markets. So the healthcare industry in India, or rather the pharmaceutical industry more specifically, has become an export oriented one rather than a inward domestic company sector. So forex rates plus what happens in those foreign markets are going to be bigger issues on what happens to our pharma companies than anything else. So we need to now actually start keeping our minds open and actively go out looking for global pharma news rather than local pharma news. So this is okay. So another one you can look at, but I think more a traders thing than investors, in my opinion. Metals, all right. So another sector like capital goods, like power, way below its life high. Again, shows you that if you're in the wrong sector, in the wrong stocks, how you can destroy wealth, while if you're in the right ones with, let's say, banks or autos or pharma, how you could really have created significant wealth. Now, the thing with metals is that it's come to this extremely important multi-year support of around 10,700, and it has just bounced up from there. Okay, so to zoom in, you can see the bounce now, right? And if you are a long-term investor, this would definitely be a good time to get into metal stocks. So that's right. So metals multi-year, very strong support. So you should perhaps look at individual metal stocks and consider getting in. Again, remember, look at it from a long-term perspective. You've got India recovery, the Chinese economy cooling off, double-edged sword. But if global commodity prices come down, if iron ore prices come down, etc., it'll be good for this metal processing companies. Maybe overall lower metal prices, but hopefully better margins for them and therefore better profits. Do keep that in mind. Okay, so definitely metals is a place to enter now. Okay, the PSU index, really not going to spend too much time on it. It's really a mixed bag, all sorts of sectors in it, but yes, definitely done well. On a long-term basis, this looks, like a flag for those of us who know TA, and you've had a move from about say 5,500 to 8,500, a sort of flag formation, and it'll just jump up. CNX PSU Bank. I'm not sure I have it. If it's there, I'll definitely look at it. Okay, so I was talking about PSUs. So PSUs as a group could be on the verge of just a breakout move, but then, like I said, mixed bag. So really not too much that you can read into this. Yes, if the reforms and all that the central government is planning go ahead, then the PSUs are one place where a lot of activity could be expected in the coming months. Power, reality. Okay, we finished all that. Nifty Junior, right? So this is just the long-term Nifty Junior set, and I would say perhaps better place to make life high moves than the Nifty. Right, already done an MACD crossover. So sometimes, not sometimes, as we have seen regularly, and to my regret, I think we've paid in the past too much attention to the index stocks, and a lot of action happening in the non-index stocks, and we need to find a way of finding these, and maybe the stocks in the Nifty Junior are something that have some multi-baggers in place. Doesn't have as many. Oh, it does. Windows I was looking at. Okay, it does. So again, the same thing could correct, but I think better place to make a life high than Nifty itself. Energy. So this is different from BSE Energy. This is a lot of just oil and gas companies, and they have cooled off. Nice triple bottom, and remember what Dow theory says: triple bottom seldom fail. So very good time to pick up some of the energy stocks and run with them for the long term, I would say. Once they break, the index itself breaks 9,600, 10,000, then definitely on a much higher level. Very unlikely to break below 9,100. Okay. Yeah, I think we've done everything. All right, here is CNX PSU Bank as Balki requested. I haven't seen this for quite a long time. Okay, the problem with these indices is that they don't go back all the way to 2007-8, so tough to talk about what levels. Okay, so given whatever we have, one thing you can clearly see is the big jump in volumes on the CNX PSU Bank in the last several months, which is definitely healthy. We've had a nice run up, and again I've shifted to weekly charts, and to me, or let's do monthly on this. Alright, so that's fine. Alright, so this is a monthly chart. Okay, please be very aware of that. And we've had a fantastic run up, and on a monthly chart, more you can see a lot of, I think, what would I say, bull bear fight happening, long upper shadows, some lower shadows, etc. It's just a question of, I think, partially profit booking, partially people entering, those who sort of missed the move earlier, and a sort of redistribution, not to be confused with distribution for a top happening, with stocks now moving to another set of hands. Remember, 2,000 to 4,000, 100% return in 4 months. What more do you want? So there will be definitely a lot of profit booking happening. Plus, 3-year resistance at around 3,800, 4,000. That being sort of, I think it's setting itself up to take this out. Like I said, RBI policy, if we start going into interest rate decline, plus inflation remains low, plus crude oil, etc., all that, and of course diesel deregulation and some more talking about deregulation, I think there's some talk about fertilizer deregulation. If that happens, then that's going to be another plus, because that's another subsidy that disappears from the balance sheet. Do we have a weekly head and shoulder? I really don't think so. I would say sideways consolidation for sure, and I would definitely say that the sector as a whole is setting itself up from higher levels. Yeah, from May to September, this is probably the trend line you're talking about, or the neckline you're talking about. Okay, rather than a neckline, I just look at this as a downtrend line, and once that is broken, I would think about getting it. I wouldn't look at any measuring implications and all of that if we are trying to look at that. Okay, so yeah, the PSU bank's also looking pretty good, but again, let me bring this up. Where is that? Okay, just to compare. So if I were to put just these two side by side, okay, and try and get this sort of same time frame. Alright, what is very, very obvious for those of us who know TA, even basics, is that the bank nifty itself has made new life highs, but The PSU bank has not even been able to go back to its 2011 high, and I'm sure the 2008 high was much higher. Sorry, right? The 2011 is this level on Bank Nifty that we're talking about. So clearly, the private sector banks are outperforming the public sector banks. So this is a question we've kept asking over and over again. Why do we even want to look at public sector banks? Why don't we just scrap them from our list? Because year after year, quarter after quarter, stock after stock, the private sector banks just do such a much better job of capital appreciation and wealth generation than public sector banks. So there is no doubt that public sector banks will go up, right, or very likely to go up. But clearly, if I were to, we don't have a private bank index, but if we did, I'm sure it would be much, much higher than the Bank Nifty itself. So I hope everybody's getting the point. So I think from a focus perspective, definitely want the money to be where it's probably best going to make money, right? And therefore the private sector banks. Okay, so I hope that clarifies. So I think we've done with the sector index. Anything that we missed? Nope. Okay, so maybe at some point somebody is going to mention this, so let me just talk about it. This is the VIX. VIX is not a sector. VIX is a volatility index, and for some of us concerned with volatility, you should actually look at the data. And if you look at volatility from the time, okay, so what should you be looking at? Just one sec, I'll just clarify this, because it might not make sense to a few folks. All right, so the pink line that you see here, that's the Nifty, right? So the pink line is the Nifty, that's not the volatility index. This red line, which is inside this sort of cyan line, that is the VIX. Let me just make life easier. Oops, didn't make it too easy. Right. So now just focus on the red line. Okay, and if you look at just the red line, then the VIX is actually not high. It's actually pretty normal levels. So if anybody is talking about high volatility, well, the data doesn't support that. The volatility is pretty okay. It's pretty normal. And I think what's being confused about volatility versus everything else is that you've seen the market go down, and a lot of times the general public tends to think, oh, market correcting, and markets do correct faster than they go up, right? Tends to mean that there's a lot more volatility. Wrong, right? So you actually have, if anything, there was an increased volatility in the downtrend, and now when we've had this up move in the last week, you've got volatility coming back down, and it's at at 13, 14, 15 at very normal levels. So really absolutely nothing on the data side to say that we have high volatility, right? We probably get event shocks going ahead, but as of now nothing to worry on the volatility side. Okay, so that's it. So we've covered all the index stocks. Sorry, I didn't make notes. I hope others did. Coal is as a theme. Metals definitely something to be in. Did we say anything else to be in? I think we said realty and power. Get in later, as they start to take off. For now, I think bank, metals, autos are good bets, right? FMCG may underperform going forward, or rather, to just make this clear, it's not going to be as good as it has been in the past. Pharma is now, what do you say, IT type stock. Okay. Foreign issues more important. Yeah, energy, power and energy, realty, power energy, right? Okay. So basically, after doing all the sector indices, I would reiterate that banks are the place to be in. How you want to play it, each one of you with your risk appetite, you need to look at that. Coal as a theme in the next 1 year, 2 years is probably going to pay off quite handsomely, and need to do work on finding coal stocks, right? And I think that work should be done immediately. They'll probably get pretty handsome return on that work. Metals, multi-year, very strong support, excellent technical buy, right? So that autos secular run up looks like. Yep. Have I missed anything? Okay. So Surya is saying 1 point on pharma, there is no competition in the world. I disagree. I think you get plenty of competition from Russian companies, you get from Southeast Asian companies, Malaysia, Philippines. There are quite a bit of Israeli and South American companies that make generics. So I wouldn't be complacent on that and say there is no competition. I think the competition is not domestic, it's global now. And we need to keep a lookout for that. As you know, good article recently in the last 1 week on pharma companies in the US and how the pharma market in the US is just a competitive market like anything else. You can price it the way you want it. And there is, by the way, investigation being proposed. I don't know if it has been launched in the US Senate about why some India companies specifically apparently have raised their US domestic prices a lot in the last few weeks and months. Now if something goes on there, of course it may not hold water because it's a competitive market and all that stuff, but whether it is protectionism or whatever, I don't think one can just close one eyes and say there's no competition. I think on the other hand, there is competition. On the other hand, I think what's possibly the big theme for pharma going forward is that the number of drugs that go off patent is going to dramatically increase in the years ahead, and that's going to give the Indian pharma companies a great boost to expanding their market, expanding their footprint, etc. I just piqued my interest the last few days, and I was visiting a few of the pharma websites, which I'd never done before. Very, very interesting that companies like Ranbaxy, Sun, Lupin, Glenmark, etc. are already exporting to 100 plus companies each. Some of them are exporting to 100, 150 companies. Sorry, what am I saying? Countries. Okay, so they are already on a global footprint, and you should actually visit these company websites. It's an eye-opener. It was for me at least. So since they're already so well established globally, you just have to look at global competition now, right? Okay, I think one thing that could be a great plus going forward, apart from the off-patent drugs, is Indian companies doing joint ventures and establishing plants abroad. I think that could easily be the next phase of their expansion and growth, and that's going to be a big plus. So let's see. Okay. So yeah, thank you for that, Surya. Any other comments, questions before we look at any individual stocks? All right. So okay. So this is just good input from Sid. Thank you. We have this fundamental histogram P/E ratios. I don't have it with me, so I can't show it, but Sid sends me a message saying that the auto index is extremely expensive. So thank you for that. Actually, yeah, so today we're not really looking too much at the fundamental side. That's something to keep in mind, just looking at it purely from a technical basis. At some point we should look at fundamentals also and review long-term feasibility and what gives us peace of mind. All right, so thank you for that, Sid. Really appreciate it. Okay. The irony is that while Sid says, and of course it's data driven, that auto index is very expensive, and therefore need to tread with caution. Balki is looking at all the index stocks, sorry, all the auto stocks to be reviewed. All right, let's anyhow do this, and we shall then go forward with the rest, right? So now we are stepping into the third phase of the LFT, or sorry, the IMR, which is we're going to look at individual stocks. So we just take the list as it comes in. We wanted Ashok Leland. All right. So Ashok Leland at a life high. All right. It's actually broken out of its 2010 life high, and technically that's a pretty significant breakout, I would say. But then, if you look at all the other stocks, auto stocks rather, all of them have significant life highs. So definitely a life high, but the concern is the low volumes for this week. Hopefully that should correct next week, and quite easily it's definitely going to 50. I think 40, it's at 45. So if you talk about 40, it looks small, but you're talking about a 10% correction that could happen, which at this point looks unlikely. And just this year it's gone from 15 to 45. That itself is a multi-bagger, 300%. Fantastic run up. 50, and then I think it just goes into a different orbit, because this is a stock which has never really been all the way up there in terms of stock price, and becomes 50, 60, I think you're going to get more and more interest in it. The company which is recovering from debt, trying to capture more market share, and trying to bring in some innovative products. So yeah, Ashok Leland would definitely be a buy, at least till 50. I think technically it's going to face quite a bit of resistance there, just because 50 is a psychological number, no other reason. And after that, once it sort of gets used to that 50 price, then you could see step ups in quantums of 5. Motherson Sumi. So this was a stock that the mentorship group found as a collective study, and it was really gratifying, because I think we found it around this price, around 250 or something, and some of the folks in the mentorship group did get in. And if they're still holding it, then you're looking at from 250 to 400 in about 4 months, 3 months, which is really good return. As a company, it's got a lot growing for it. Fundamentally, if I remember correctly, a little bit expensive, but technically it has taken support at 350. You've got a really nice V-shaped reversal which is going on. The concern again is tapering of volumes. From a trading perspective, yes, could go all the way to 440, but it would be a challenge to perhaps go beyond that. And Balki is adding that the slowdown in Europe is bad for Motherson Sumi and Bharat Forge. They are more than 75% of the business from Europe. Yeah, it's true. I don't know about Bharat Forge so much, but Motherson we spend a lot of time studying it. One thing I want to say about Motherson is that yes, the slowdown is definitely going to hit Motherson Sumi. There's absolutely no doubt about it. Having said that, I just want to also add that the products that they make, as these products find their way, and they make a lot of high-end ancillary products for some of the top car companies in the world, BMWs and Audis and all of that. What I'm basically saying is, as some of these products start to find their way down into the lower end cars, the volume expansion that happens for Motherson Sumi is fantastic. It then becomes a volume game, a price game, and it's things like automatic climate control. It's things like integrated side indicator lamps with cameras and stuff like that, which is just a part of the natural progression of technology. So I think I'm talking again from a 2, 3, 4 year perspective, Motherson will probably do very well, but at this point technically only till 440, and then we would review it, and 350 seems to have become a really good support. If it does come back to 350, it's a stock worth reconsidering to buy. But if not, that we'll review that at that time. Okay, then what was on the list? Tata Motors, right? So Tata Motors, again, another stock at its life high. As you can see, it had a sort of double top in 2011, 2012 right there, which it clearly broke out of in 2013. So may not sound very relevant, but anyhow it is technically, right? And then it has just kept running up very nicely after that. In the last 3-4 months, there's definitely been a sort of rounding formation which has happened in Tata Motors, and therefore need to be a little circumspect about buying Tata Motors right now, though that rounding formation has really not broken down. This would have been a multi-month trend line which clearly got broken. We'll just keep it there anyhow because it got reacquired. And so technically good support at around 480 levels. We'll just keep a line there for reference, and quite likely to go back to 540 in my opinion. Again, nice MACD crossover. The I think 2-month correction sideways is over, and this is something that could actually has the potential of going higher. But keep in mind what Sid said, that Tata Motors, one of the heavyweights in the CNX auto index, and if the auto index is essentially expensive, then by default Tata Motors is also likely to be expensive. Exide India next. Okay, so again, the value of tracking. The big story in Exide India to really keep in mind is that it's got a multi-year top here at 2010, 2011 and 2014, which it has really not been able to break out of, which is 175. Any breakout of that 175 level, you should put up an alert, would be an excellent time to get into Exide India. And what is definitely good news on this one, first stock today that is showing this good news, is the good volumes in the last 2 days, right? So 150 has definitely become an excellent support for this stock. The low was 150 10 paisa, as you can see, on 21st, just 3 days back, and it has now come back to 159. Purely from a technical basis, I would say that this is now definitely something that you could look at buying. You have a really good stop loss below 150, preferably below, I would say, 144 for investors. And on the other hand, even if you don't buy it now because of caution in the overall markets, you should definitely put an alert on 175 for Exide India. If 175 breaks, which is just a question of when, not if, then stock is easily going to go to 200. And again, sticking my head out, I think it's a FNO stock, right? Could make some decent money on that. The 175 call, the 200 call, maybe a bullish spread on that, or even going in now at 150 call with 175, etc. Or 175, I just give it 2-3 days, next week, Monday, Tuesday, volumes pick up like this, then just go in and buy Exide India. Okay. Of course, Exide now has plenty of competition from Amar Raja and Amaron and Bosch and quite a few others in the non-organized sector, so it's finding things more difficult. But one big plus that could happen is if global raw material prices come down, then that's something that Exide India will definitely benefit from. So and if auto sales increase, which they haven't really picked up, but if the economy improves, then auto sales will, and that's the question of Exide also improving. So technically, really good place it has come to. Again, a 4-year support level at 145, sorry, at 150, unlikely to break. I think technically a good buy, investor wise could be a good buy. Watch for 175 breakout and then trade all the way to 200. Even if on the spot market 175 to 200, that's a good 10% plus return, which could happen as from a trading perspective, just in a few weeks, not even 3-6 months. And once it conquers 200, then 225, 250, quite possible. Okay, next, Maruti. So this is a stock which has really, just done amazingly well. Just tends to surprise, at least surprise me. Sorely regret not getting in that IPO. Like a fool, I thought I knew enough. And I remember some broker calling me up saying, "Sir, buy damn good." And I had some intellectual argument with him, saying, "What is this very expensive stock? What cars will sell this, that, and all? Padmini and Ambassador is already there." And obviously I was wrong. The guy must have made money. Well, on that stock at least I missed out. Okay, so the thing about Maruti is that it made another life high yesterday, or rather day before yesterday. Okay, so amazing company. They have said that they're going to come out, and that life high, by the way, there is candle. All right, I hope you can see this. Just follow my cursor at the bottom of the screen. I'm just pointing that out. High volume, right? That was Thursday. Sorry, Wednesday. So I'm not talking about the Muhurath trade. I'm talking about the full day activity. Good volumes, definitely higher than average, and that's, I think, an indicator of things to come. They're going to introduce 2 or 3 cars every year for the next 4 years, if I understand right, and they're behind the curve on the small SUV, but everywhere else they seem to be doing an excellent job. And their goal is to get back 50% market share of the Indian car market. They're right now at 46%. If 50% happens, that's going to be a fantastic achievement. And technically, fundamentally, I don't know, could be expensive, but technically this is definitely looking good. I think this is a stock which is going to go to 3,500, 4,000 next year, and has been on constantly our buy list in the IMRs for the last several weeks and months. Just to point out, for those of you who've been on IMR on a regular basis, especially folks in the mentorship side, I hope you're getting a sense of long-term how things can be and the opportunities that present themselves. And if we perhaps start looking a little more long-termish and then being smart with our F&O strategies, the sort of money that can be made, and really sort of battening down with, or rather being willing to accept M2Ms, and if you can write those M2Ms, the sort of money that can be made, right? So just throwing this idea out, especially for the mentorship group or the F&O group, because I really believe that in the next 3 to 5 years, of course, subject to global factors more than anything else, India could really provide some really fantastic opportunities, and those opportunities, I would say I definitely missed out on the 1998, 99 boom. I was too young, I didn't know enough. I would say I didn't make enough from the 2003, 2008 secular bull market that happened, and this could be another one. And you know what? That's another 10 years gone then, and then you're just stepping into a different phase of life. So for all of us, I think we are getting possibly an opportunity which on a secular basis, which perhaps would not come for another 5 to 10 years in our lives, and you really need to take that seriously, because I think quite a few today have been in BIC for quite some time, hopefully understand a little bit better what I'm talking about, and others who are new, some of you have met some of the new folks also. The life stages that we are in, you really need to take this seriously, all of us, me first, because from a lifetime perspective, I don't think these sort of multi-year opportunities they will happen again, but I'm talking about taking advantage of them. What's the point of when you're 70 and you get opportunities? What are you going to do with it, right? You're going to do it now. So Come on, guys, let's buckle up and do something. Okay, so any Maruti guys and girls, if there are any, I don't know. Okay, Maruti definitely a good buy. I would say technically, fundamentally, I reserve my judgment on that, call on that, and 3,500, 4,000 sometime next year, quite possible. I will stick my neck out and say, however, that I think sometime it's going to come back to 2,500 and correct. Right, stocks tend to have this tendency of wanting to sort of retrace their moves because there hasn't been a correction back to 2,500. And if that happens, or even for that matter, there hasn't been a correction to 2,000 also. So at some point, I'm definitely sure that correction to 2,500 to even maybe 2,000, which looks very unlikely, I know right now, could happen, some global event or whatever. And when that happens, that will really be a mouth-watering price and valuation to get in, right? Okay, so that's Maruti, then Bharat Forge next. Right. Okay, so this stock was a darling a few years back. Look at this. In 2006, the stock was 470 bucks. In 2009, it came to 82 rupees, and today it is at 768 rupees. What a fantastic run up, right? So from 2009 to now, it's almost a 10 bagger. I mean, who would have imagined? It was a darling of the markets, of the media for some time, and it just went out of favor. They borrowed like hell, and I think their debt is what killed them basically. And after they, again, I want to point out to technical breakouts. Let me go back. Right, so once 400 broke this year, that was the time. This was August, my God. And so August, September, October. In 3 months, it has gone from 400 rupees to 760 bucks, almost double. Right, what a fantastic breakout. Let's just look at volumes. Okay, let me just look at a longer term picture. Yep, yeah, definitely associated with excellent volumes. The volumes were there even before the breakout. Unfortunately, I think the correction does not seem to have had significantly lower volumes except for, of course, 2 weeks. I don't know how many were holidays in between, and of course last week. But looking a little dicey from a multi-week, multi-year perspective, multi-month perspective, but could have easily come down to a really, really good 700 technical level, 750 level. It's just turning around, that's for sure. And 900 is definitely on the cards. Sorry, what was the life high there? About 920. Okay. I don't know. I think wouldn't be too keen to get into this right now. You've had a 100% run up. I think best to ignore this and add to what Balki said about their business in Europe and all that. Could be a bit of a challenge going forward. I mean, from a fundamental perspective. So yeah, that's the view on Bharat Forge. Okay, good. What is the next list? Does anybody have one? Anything that you're keen to look at? And any other? Of course, there are lots of auto stocks. Mahindra is doing well, and there's Rana Steering, Sona Koyo, etc., and all of that. Right? Okay. Capital goods and infra. Crompton Greaves. Crompton Greaves. Nice run up from 70, 80 levels to 200. So what a move! Really, really impressive. but I think Crompton Greaves is not technically not showing the sort of strength that I would have liked to see. And technically I think I would just stay away from it for now. It is possibly technically at a good level, but again, look at the MACD, just still trending down. Really no strength on it. Not to say that it's not a good buy, but from a long-term perspective, I would rather wait. Having said that, it's very close to its support level of 185. It's 188. It's almost as close as you can get in terms of spot markets. You have a nice long lower shadow a week back, and a sideways consolidation for the last 4 months. So from say 180 to 220, that's 40 bucks. If 220 breaks 260 is distinctly possible. Okay, and 250 of course will be an important resistance, but I would wait. I mean, for those of us who are willing to take I would say from today's IMR contextual perspective, a slightly higher risk, then you could buy this. There's absolutely no doubt about that. Put a stop loss below 173 and just hold on to it patiently. 215, 220 would happen if the markets revive quite easily. Question is whether it will break out of that, and then if it does, you should hold on for 250, 260. L&T. Okay, so L&T, if I'm right, declared a bonus last year or something. Okay, so the thing about L&T is, and this is one of those live stocks, live meaning technically you can really follow what is going to be said. 2008 peak, 2010 peak, that's like a significant double top, and then finally it breaks out of that here in the middle of 2014 and breaks out of that 1500. This is so after adjusting for bonuses. All right, and it goes to it's come back and recovered from 1500, and it should go back to 1750. Like the L&T is one of the big heavyweights of the capital goods index, and if the index has to do well, L&T has to do well. If India does well, L&T does well. It's just a sort of no-brainer. I don't know how many of us keep in mind that the size of L&T. I read somewhere in one of the business papers that you can take the next 3 to 5 infrastructure companies and put them all together, and L&T is still bigger than that. That's how big L&T is. And I think L&T is really an India story play. If the infrastructure thing takes off, then L&T takes off. And I think it's just a matter of time that the infrastructure thing takes off. L&T, I believe, and I'm just saying this from gut feel, not on the basis of any news, will definitely be a major beneficiary from coal deregulation. They are into conveyor belts, they are into heavy machinery, they are into electronics. They've got some joint ventures with Hitachi, with Komatsu, all that stuff. So L&T is a huge conglomerate. Earth moving, all that is just one part of it. They have some world-class expertise, and on the mining side, coal mining, I think they could benefit significantly, and one may want to look up that. From a technical perspective, definitely a good buy. You have excellent support here at 1400. You've got a nice bullish engulfing plus the 200-day long-term moving average, which it has not broken. Volumes again remain a bit of a concern. Oh, this is interesting. Let's see if it is there on weekly charts. Okay, so I don't think what I'm going to say next may make sense to everyone, so just bear with me, those who don't get it. But for those who get it, you will know the value of what is being said. Let me make this easier. I'm just going to collapse this. and I'll collapse this. Okay, so you have two indicators on top. You have the LNT thing here, and this is what I want you to observe. So this is connecting the bottoms, and those of you who know what I'm doing should put out a message on chat. Okay, so and that too, this on the MACD, right? And you can get the same thing on the RSI here. I just won't not repair it. But the fact that you're getting it on MACD is an extremely good signal, pretty reliable signal also. And simply on that perspective, I'm really sticking my neck out actually on this one, and saying, go buy LNT tomorrow. And of course, please, for God's sake, don't expect you're going to make 10% return by the end of the week or even by the end of the year. Just hold on to it, right? So positive divergence on MACD, MACD itself being a 20-day plus indicator. So nice small pickup in volume on Wednesday. So I don't think LNT is going to fall below 1400 in the near term. It's going to be extremely unlikely. Plus you probably have, okay, so that I'm trying to find the most extreme line. Alright, so the most extreme downtrend has also been broken, which is a healthy sign. Okay, I think a good time to buy. So you should pick up LNT. I'm not talking about this from a trading perspective. I'm talking purely from a investment perspective. Of course, you can convert it to a trade if you like. 1375, 1370 as a very good stop loss, which I don't think will be hit. And 1700, 1750, 1800 on the top side can be a very good target. Taking a digression, if you are a trader, yeah, you could even put 1468 as a stop loss. As an investor, like I said, 1370, 1375, and I would just hold on for 1750, 1730, 40, 50, and then review. Given the setup right now, I think it could easily break 1760, and if it does that, then 2000 is just a question of time. Let's give it the first quarter of next year. Oh, by the way, totally forgot. Where is our budget? Isn't the government supposed to present a full budget? Did that happen? Did I miss it while I was on Hajj or something like that? Or is it still coming? If somebody just enlighten me, please. Right? No, that Feb will be the next budget, next year's budget. This year's was an interim budget, and when the UPA, okay, fine, sorry. You're talking about, okay, I live in a different time warp, I think. I'm still not out of it, sorry. Alright, so I think by next time, Feb, okay, coming Feb, that's 4 months from now, as the budget season picks up, you're going to see a lot more incentives, a lot more reform, and infrastructure side. I mean, that's the big thing that India really needs, and LNT will definitely be a beneficiary of that. So, one more thing, talking about LNT, it's going a structural reorganization. It's got several business lines, and they're going to be spun off very slowly into separate heads with their independent CEOs, and then there's going to be a group holding company. This is what the plan is. I don't know how far it's been implemented, but as that happens, then each of the business units gets business verticals, becomes an independent entity. It gets its own freedom to do a lot more rather than take decision making higher up. A lot more nimble. It's already a huge organization. So there's this huge demerger possibility which is there in LNT. I'm talking again from the 1 to 3-year, 5-year perspective. And enough said about demerger wealth creation that happens. If you received all the baby companies while you held the parent company, you could expect significant wealth to get created 3 to 5 years from now. Okay, so I think from an investment perspective, technically right now with this very nice positive divergence, plus this long-term story, plus the India recovery, plus the reforms that I expect will come in the next 3 to 4 months, I think you've got sort of found LNT at a sweet spot, technically and fundamentally. and let's say politically, and should be now I think an important part of your long-term portfolio, especially if you're like large cap stocks. Okay, that's about LNT. Great, thank you. Anything else? Cement, Ultratech, and Grasim. So first of all, by the way, both Ultratech and Grasim are part of the same Aditya Birla group. So Ultratech had this big fall last week, not sure why, and then it's got a sort of tentative recovery, you know, and that tentative recovery is really that, it's really tentative. Aditya Birla is keen to make his cement manufacturing one of the largest in the world. They are bidding for some plants of Lafarge, Holcim. They've got the whole assets for sale, from 10 or 15 plants, and I think Ultratech is bidding for some of them. Not sure how that could go, and that could be, I think, you never know, you know, a great plus or minus for Ultratech going forward, depending on the financial overhead that lands if the deal goes through. And that's an event risk that you need to be prepared for on Ultratech. So it could spike down or spike up. Technically, it looks good above 2500. Let it break out of that 2500, 2570 zone, and then technically you could buy it all the way to 2800, 2850. But that event is, I think, the big concern. And if it goes beyond 2900 and 3000 easily, and who knows, much higher levels after that. Okay, so again, just to demonstrate technical stuff, you had this sideways move for the whole of 2012, 2013, and then the breakout, it went from 2000 to 2800. So finding, you know, long-term levels like that, reliable breakouts like that, and you know, you have again, for revision, volume breakout. What more do you want? You just hold on to the, you know, stock, hold on to the position, and don't chicken out too early, and well, in front of your eyes what sort of money can be made. Okay, so just trying to drive home a point here. And so like I said, technically I think wait for it to break out of 2570 and then you can buy it. Very good support, I think, at 2285, and that can be used as a stop loss. Next, Grasim. So not sure if Grasim is, you know, Grasim is a sort of mixed bag. I don't know how much of their revenues come from cement. Going forward, I think, you know, multi-year breakouts would be a theme to really work on for the coming quarters. Maybe the next 1 or 2 years, you're going to find plenty of those. And so Grasim is trying to do that, and has, you know, attempted to make new life highs, or not actually, it's attempted to go back to its old life high of 2007, which it has not been able to do. It will do that. There is absolutely no doubt about that. And I think that's the time that you could really pick it up, especially from a trading perspective. But at this point, it also has some really good triple bottom support at 3250, and that should hold, in my opinion. So as a trader, you could use that as stop loss, or at around 3125. 3700 will be a critical resistance, and then 3950. Watch out for 4000. If 4000 goes, then you know, then we just would take off, in my opinion. So from a technical perspective, I think 3150 there, about good stop loss. Now that you have a triple bottom, good technical place to buy, but not too much of a headroom technically. Really, the action will happen once 4000 gets taken up, and therefore you should definitely put a alert for that. Remember, that will be a new life high, and after that 10, 15, 20% up moves are quite possible. Sudhanshu says most cement companies are working below 50% efficiency, very low demand and dull reality. Thank you so much, Sudhanshu, for that. 50% below 50% capacity is what you're trying to say, or 50% efficiency? Low demand and yeah, all right. So thank you. So 50% capacity, which that's the funny thing about the markets. If they're working at below 50% capacity, uh, technically it becomes, or rather fundamentally, sorry, becomes very difficult to explain why are these stocks almost at their life high. So they look at Ambuja, you look at Grasim, you look at Ultratech, there must be something really, really wrong. Plus, somebody like Aditya Birla Group going out and adding capacity, trying to become the world's largest, not or amongst the top three. I don't know, doesn't add up. But yes, it's entirely possible that technically the markets are heading up, maybe not into fundamentals at this point in a very strong manner, and that should caution us as to the falls that can happen. On the other hand, the good side of your statement, if they are at 50% capacity, is that when demand picks up, which I think is likely to when infrastructure growth happens, then there's really no need to add new plants. You just dump in more raw material and you get out the product quickly. So they have the ability to really jump in and ramp up capacity very, very, very quickly. And that's a good plus, because if that happens, then that's going to be a cyclical uptick in capacity utilization without capex. So the margins, even if they're the same, is very good. You get increase in EPS maybe 2-3 quarters down the line. So I think that statement is both a good and a bad statement. Talks about how the companies could really jump on once demand picks up. On the other hand, shows what risks there could be if things actually don't catch up. The thing about the Modi thing right now is it's a lot more talk than delivery. But then yes, 6 months is not enough. 6 months flies, by the way, doesn't it? We'll really know, I think, another 6 months, 1 year down the line, whether the reforms really kick in, and I think they will. That's what everybody's expectation is. And if that happens, then the cement companies and the metal companies are definitely the ones that are going to have a big I think plus. So giving your getting your statement, this is how I would play it. As an investor, I would get in, but I would look at my stop losses very carefully. It's completely one different situation when capacity is full out, because then you're sort of in a pseudo monopolistic situation, and if demand picks up, you can increase price. By the way, on talking about increased prices, in spite of 50% capacity, cement prices haven't gone down, right? As a matter of fact, there's this constant thing that keeps coming in the news every few months about cartelization of cement, which from an industry perspective, good. From an investor's perspective, good. Unless the CCI comes in and gives them a multi-thousand crore fine, I don't think the situation is going to change. So all said and done, I mean, wonderful to know this, but wouldn't be too worried. Actually, I'm more biased toward looking at that statement from a positive perspective, right? As already explained. Great, thank you so much for that. Okay, Tata Chemicals. So looks like we are doing others Muhurath list. Good, actually. Why reinvent the wheel? Oh, I'm surprised. I wasn't expecting Tata Chemicals to be close to its life high. Again, don't know too much about this. If anybody has any additional information about Tata Chem, please put it in. Be nice to do collaborative IMRs actually, where different people have different expertise and the data to back it up, and then we can really have one hell of a interesting, useful, profitable discussion. So Tata Chem to me is mostly a fertilizer company, but of course they do a lot of other things. I could be wrong. Please correct me if I am, and also validate me if I'm right. Okay, so Tata Chem poised, I think, for a breakout. Fertilizer deregulation, definitely a good thing for this company. I don't know what else they are into, soda ash or something. and soda, they're one of the leading producers, I forget, okay, of soda ash globally. Uh, Let me make this weekly. All right. Wow, this is almost like a 1994, 20 years. Gosh. Right, so fantastic volumes, right? Except that volumes have tapered off in the last 2-3 months. Not a very good sign, but nonetheless, I would say looking good. Just a question of that breaking the life high, the green line. MACD has done a nice crossover at the zero line. The RSI has gone up, and the volumes are a concern. I would say you should buy it with a very nice stop loss below 375. It's 410.40 right now. Nice consolidation of a sort of bowl cup sort of consolidation. Your neckline or threshold to watch out is 420, and then after that 435, which I think it will break out, and then it's breaking out of a multi-year resistance. And once it does that, from 2008 onwards, so 6 years, then this could just zoom up. It's actually been on a nice uptrend already, right? So if we keep that in mind, so even if it doesn't break out this month, next month, I think if you look at that uptrend line, sometime early next year breakout should happen. And yep, definitely investigate Tata Chemicals more, go to their website, look up their fundamental. Let's do that mentorship group, and you could be sitting on a good quality company which has a potential 50 to 100% return 1 to 2 years down the line. Good, we're looking at this. Rarely look at it. All right. Okay, so are we keeping the banks for the last or what? Because I suggest we keep the banks for the end. If you're doing nothing else after this, we'll do the banks. If there are any other stocks, then we will do this and close. What do you want to do? What about the others? What is F? So what else is left? I mean, I know there's a lot else left, but what else do we want to do today? Because I would say let's do banks at the end. Okay, let's do metals. Really, let's keep banks at the end, because I think let's close it on something which is quite reliable and I think high probability. Okay. Okay, HCL Tech, Wipro, Infosys, TCS, IT. Okay, so market disappointed with HCL Tech. This was another stock that we just said buy. I think I said that buy in something mid 2012 or end of 2012. It was 500 bucks. It's 1500 now. That company has really reinvented itself, done some wonderful reorganization, blah blah blah, and actually from a performance perspective was outperforming TCS, Infi, etc. by a long shot in the last 2 years. But now the question is whether that story is getting over. Right? Remember, we as human beings tend to be too emotional about too many things: our jobs, our careers, our education, our achievements, and all. And the markets, don't give a damn. Something that we really got to understand. And why was I saying this? Because nothing stays good forever. So while for the last 2 years HCL was definitely the leader in our IT pick, I'm just wondering whether it is anymore, given the sort of price action that we are seeing. And so what you have is, even before the recent drop, is a consolidation almost the first 6 months of the year, of which it did do breakout. So that is consolidation from there to there, a sort of breakout there, but didn't go too high after that. Sort of cooled off from there, and then last week you had the disappointment in their results and all that, and fell like TCS did. So the real issue is whether this is a one-quarter blip or whether this is something that is a sign of things to come, and there's no answer to that really. It's way too early to answer that question, right? So I think HCL, sorry, is something that you just play technically right now rather than fundamentally. Okay, of course you could find a lot of fundamental news, I'm sure, and I would say you can see that after the big fall, nothing of a great recovery. Would like to see definitely more evidence. So the technical play that I would do on TCS is I would wait for it to break out of this level and close the gap. So 1590 is a critical level, and then 1590 to 1650 would be a gap worth trading on the FNO side. And then if you still get strength after that, then all the way to 1750. Any long-term investment in HCL, I would do only if 1750 actually breaks out. Okay. If you're already holding HCL, then if further weakness happens, I would definitely sell it off. So you're looking at Jan for the next set of results. Really question of how the stock behaves by then. Again, tends to be a dull quarter with the international markets or international business sort of going in, going into slow mode for the year and Christmas and all that. So technically, there's this big blip on the chart, and until and unless that gets broken out, I mean, at the very least, I want 1650 to be achieved before I go in long again on the spot market. I would play this only from a technical perspective if it goes above 1600 to close that gap with futures or options. On the other hand, I would watch at 1450, 1350 on the way down, and review it at that point. Other than that, it's don't touch the stock for now story. Next, Wipro. Okay, so thing about Wipro is, it's still not come back to its 2000 peak. So if you are a lesser mortal than Azim Premji, you would have died of a heart attack, because for 15 years you're still below your lifetime net worth there. But of course, he's not a ordinary mortal. None of these guys are, otherwise you can't build companies like this. So you take out the 2000 peak out and sort of ignore it. And this is a stock which has actually been making new life highs. And I don't know, does anybody know how the results went for Wipro last week? Were they bad? Infosys announced some good ones. I'm not sure how Wipro was. Wipro seems to have again restructured itself recently in terms of senior management and all that. Okay, so Balki says Wipro not good. Not good as in street expectations didn't meet, or it met and market didn't like it because TCS and HCL were already down. We have to differentiate between that. All right. So anyhow, what's definitely not good is this candle. The rest of the market went up. It went up and actually gapped down. Wonder what's happening. This is when the results came out. Did they announce the results on Diwali Day or something? Again, I would say forget about Wipro right now. Given this big down gap, everywhere else I've seen an up gap. I haven't seen a down gap. First down gap I'm seeing. So should be probably definitely be reviewed next week and see how price action is. 550, good sort of pivot around which it tends to go. Results on Wednesday evening, so Friday it reacted. All right, okay, so it didn't react too well. But on the other hand, not really. Yeah, it is a gap down actually, 585, but not as bad as rest of the market. Let's wait on Monday and then we'll review Wipro, I would say, because I don't think this is just Muhurath trading. not too much. Let's see, look at volume. Right, not too much volume. So okay, whatever the results were, either the time was too little or there was, whatever, lack of interest. Uh, 550, 525 is technically very good support. 500 is fantastic support actually. Uh, if all going well, it's possible that, you remember that the life high is around $1,000. You're still talking about 100% almost from current prices. If it goes to 500, I think that will be really, really a good place to review Wipro and buy it at that time. I don't think it should break 500 unless something major happens, and therefore I just leave it for next week's review, because I don't think the price has been fully discounted into, the results have been fully discounted into the price with Friday's trading. So let's just take a chill pill on that. Okay, but like I said, 500 fantastic. Just one thing to add about Wipro in terms of its long-term potential and strength. This cup that you see, or this bowl that you see, that was on account of demerger of Wipro IT services and software from Wipro vegetable oil and bulbs and electricals and all of that. And this was the fall, right? And then after that, after the fall, Wipro itself, without the other parts that were being included on the balance sheet before, has actually, gone up, made new life highs and created significant wealth. So that should tell us something about the quality of the company that it is and what is potentially there in Wipro. So don't write it off too quickly. You can also see that for the last 10, 20, 10, 11, 12, 3 years, 4 years, it's really not done something well vis-a-vis, let's say, HCL Tech, which for the last 2, 3 years has just kept going up and up and up. What I'm trying to say is companies go through phases, right? And Wipro has had, like Infosys, not a very good phase in the last few years. If Infosys has had worse, partly because the market pays more attention to it. And the theme that I'm trying to talk about, and I want input on if anyone has anything to add, is when companies restructure and then they just get on to a different level of performance, and that doesn't last forever. Again, for a few years it does well, like HCL Tech did for 2-3 years and seem to have gotten their act together. If Wipro has gotten its act together, then this is a stock that could go to 1,000 rupees. So if you have any contacts in Wipro, if you have any friends in senior places, talk to them, figure out what's happening, and never know. If this is a stock that has a potential of going to 1,000 even 2 years down the line, and you have conviction on that, then fantastic. For a risk-adjusted return, you're making 25-30% a year. You are well on track to becoming a multi-crorepati with investments like that. And of course, for the F&O guys, if what more is possible if we are smart about that. Okay, so that's Wipro. What else? Infosys. There are a lot of mid-cap IT stocks which we sort of never look at, and we need to really spend time on that, find them and run with them. Okay, so Infosys, life high, and it has actually broken out of the 1999 life high, and look at it. The 99 life high was 1,800 and the stock is now 3,800. Wipro has not broken out of its life high, by the way. So just making mental notes for the distant future. Okay, so Infosys results were good, markets liked it, and went up on really good volumes. So not only breaking out technical levels but creating new life highs, and they announced a bonus which markets love. Okay. They still talk a lot about buyback from Wipro, from Infosys, for Infosys to do a buyback of its shares, whether that will happen or not. So we had a correction. So after the results went up, we had a correction. I would attribute that to the overall market, nothing else. And it's just sort of what? There, it technically pretty okay. Right, you definitely got an uptrend there. 3750, technically a good time to buy. Uh, Once it's going to take some time to get used to becoming a 4,000 rupee stock. I don't know when the X date is. It will become 2,000 bucks then. And then, stocks tend to spend some time getting used to these new levels before they move on to the next level. So I would definitely say that Infi should be bought. By the way, there was a 1,400 crore deal. I think LIC increased the stake in Infi at almost life high levels. Not that LIC is a paragon of financial wisdom, but tells you, when they make a big commitment like that, then something definitely behind it. So buy buy Infosys from a long-term perspective. I would definitely say that. And I don't know when the X date is. If somebody knows, it will be great. The X date for the bonus, because once the X date happens, the stock will, I think it's a 1:1 bonus, stock will halve, and there should be then even more interest coming back into the stock at that time, simply because it will be, cheaper, more affordable. That's it. Nothing else will change. Buy Infosys on a pre-bonus basis. Stock at 5,000, another 20% higher from here, year down the line, quite possible. That excludes any dividends, of course. Okay. All right. So then, what else? TCS. Okay, so again you can see how this stock has really done amazingly well. I don't think many of us really appreciate the quality and the size of TCS. Everybody talks about Infosys, we talk about Wipro. TCS really doesn't get the attention that it deserves. And on the slide, it just goes on and does so well. 2009 low, or approximate average price 261 rupees. Today is 2,400 rupees. A mega stock like this, large cap stock like giving you a 10x return, what do you want? Anyhow, so yeah, not good results, just like HCL Tech, but TCS is a different ball game altogether, I believe, and has actually come back in a way to test its old life high. Again, those of you who are regular know that that's approach I really like. So premature to buy this, I would say. You had this fall, and so technically there's still no strength, but this move from 2,500 to 2,650, there's a window there, right? So like all of us know, and let's look at it. So that is there. That one is there. So that's the window or the gap that needs to be closed. We're talking about 2,500 approximately to 2,650, 660. So 150 bucks. I would just go and put an SLTP buy once 2535, 2550 comes, and then close this gap, right? Very unlikely, I think, that it's going to break below 2350 or its 200-day moving average. If anything, it's going to find a lot of support there. What's interesting is got its sort of life high there, or rather old life high there, plus the 200-day moving average on that, around that place. So very unlikely to, I think, break down. But if it does, for whatever reason, right, then 2,100 is a level to really watch out for. Oh, by the way, just a thought crossed my mind. We're talking about IT and we're talking about pharma, all that stuff. You have to keep in mind that if reforms happen in India, if fiscal deficit comes down, if consolidation of national political power happens, if corruption really gets taken care of, if efficiencies really happen in the system, if coal really happens the way the government is saying it will, and all that happens, then don't be surprised if you see an appreciation of the Indian rupee. that appreciation of the Indian rupee is not good for any of these companies. So that's something that you really need to keep in the back of your mind. Any export-oriented companies would get hit by this, rupee appreciation going forward. And I'm talking again 6-month, 1-year scenario. So the rupee is something that you really need to keep an eye on in the coming, forever, I guess, but perhaps a little more carefully now. We haven't gone back to our 64, 65 levels. We are there around the 61 levels, and we creep back up to 60, 58, 50. You're going to see the impact of that on all these IT stocks. So have that at the back of your mind when you're looking at this from a long-term perspective. Have one eye on the rupee rate. Okay, so TCS, good level, I would say. Technically, you could definitely buy it. Good stop loss, I would say 23.10. On the other hand, as soon as it goes above 25.30, 25.50, I would buy it for a trade to 26.50, 26.60. I would review it at that time and look at whether it can go above, whether it can go to 27.50, 2800. So that's on TCS. Metals, Tata Steel. So metals underperforming sector, okay, and so is Tata Steel in this. Recent news on Tata Steel is that they're trying to get rid of their European assets, and if they do that, that's going to be pretty good for them. They haven't really been making money on their European investments, so you can bet that once that is announced, you will see a sort of, I think, if not re-rating, at least a bounce on the stock. And technically, what's very interesting is that it's at the neckline of this sort of 2-year, 2.5-year head and shoulder bottom. So those of us who know Doe theory and talk about testing of necklines, well, that's exactly what is happening right now. You're getting a testing of the neckline, and it really doesn't get much better than this. So volumes slight pickup, but really nothing to write home about. If there is anything, you have something in the MACD here, and definitely on the RSI you had positive divergence here, and then it's trying to go up, but all those moving averages there have really muddled the picture for the stock in the short term. I would say 490, 500 on the upside, potential roadblock. Once it clears that, then 550 could quickly happen. But again, given this multi-year level that it is in, and let me just yeah, I think pretty decent level to get in at from a portfolio perspective. Not necessarily from a trader's perspective, but from definitely building a portfolio, looks pretty attractive. Even on the 200-day on the weekly charts, 200-week MAs and all of that, they're all below that, so that should provide them plenty of support. It's also on a multi-year support zone around 425, 430. On a daily chart, it's got that moving averages all bundled up right there, right? Actually, don't be surprised if you see a sudden spike in this stock sometime in the coming week. You have a very nice MACD crossover. Those of you who can find the confidence with MACD, etc., I would say buy it now, and just be patient. You should sell this only if it breaks 420 and down. It's already 460 almost, so I know that's 40 rupees. I know that's 10%. I know that can be a little scary, but I think you are sitting at a nice confluence of factors technically, wherein a breakout above 470 is definitely possible. That breakout will quickly take it to 490, 500. Could happen next week itself, okay? And Tata Steel will definitely benefit from this coal thing. Steel companies need lots and lots of coal to heat up and process iron ore and all energy. So yeah, technically looking very good. 440 is some really good support, but 430 and this long-term levels is what I would rather look at. And both on the spot and FNO side, you could look at this, whether you want to hold on to a quick trade till 490, 500, or you want to hold on for, let's say, the next 3 to 6 months for even 550. That's up to each individual, but I think that's clearly a possibility, and we are talking easily about if it goes from say 460 to 550, then you're talking about almost 100%. You're talking about 20% return. That's really healthy, right? And then after that, if it does that, it's definitely on a secular up market. By the way, talking about primary trends, you probably have a primary trend here. I'm back to weekly charts, and this could be the end of this correction, secondary correction. Okay, so that could be the uptrend to watch out for. Okay, so we might just be seeing the beginning of, so you've got higher tops, higher bottoms weekly. What more do you need? This is something that could really go a long way. So you're catching it, in my view, at a potential bottom, and should see a higher high, which means it should go above 550, 570, maybe 600, 700. But remember, this yellow trend line itself is 9 months, 1 year. So we're talking about the next 6 months, 1 year targets. Okay, all right. That's Tata Steel. Anything else? You seriously want to do this list now? We are already at 10:15. Okay. All right. Okay. I won't do all of these from oil and gas. I'll just do the ones I think are important. Let's do Reliance. We'll do Oil India, BPCL, HPCL, and that's it. Okay. Reliance. Okay, so the first thing I'm looking for on Reliance is whether the gas price increase did anything. I don't know, can't see any evidence of that directly. Might be missing it, not sure, but I'm wondering what this long lower shadow was about, because this is huge. On 20th, when was that gas thing announced? Was it on 20th? Okay, so don't know why it went down and up, but yep, looks like a triple bottom at around 925. Downtrend not broken. Multi-year level that it is sitting on right from 2007 onwards. So this is an extremely important and level to watch out for. Technically, you should definitely think about buying this at this price. There's going forward, Ambanis may not really be the favorites, as some of you might have seen in the newspapers. The Adani group is what led the move this year. Proximity to Modi, I guess, or at least that's a speculation. But anyhow, so the Adanis, the Ambanis may not do as well as they have. At least they haven't done well at all in the last several years. If you go by this chart, okay, nowhere close to its life high in terms of stock price. Of course, it is creating life highs in terms of profit it creates. $1 billion profits per quarter, fantastic stuff. So here you've got Reliance, and I think you've got some really fantastic supports here. It got tested intraday, and only if I think it goes below 900 should you sell this, but otherwise you should consider buying it. It's coming into a sort of congestion where the stock is going to have to make up its mind whether 920 or 980 as this downtrend and this horizontal support line squeeze the stock out. And well, just going by the support of 920, you should consider buying it, I think, given the overall state of the market and reforms and all that. First target would be 970, 980 as a technical target, 1000 as a technical target, and after that 1100 as a technical target. After that 1100 or 1125, I think that is when the next level happens at around 1400. Okay, 1400, 1300, and then really much higher, maybe back to its life high, but then that's really now a long way off. Whether this is a secondary correction of a uptrend, way too early to say, but again, like I said, this support is very, very good place to buy it. Okay, next, Oil India. So just 1 second. Hello? I'm still doing the webinar. I'll call you back. Okay, bye. Sorry about that. Okay. So Oil India made a new life high recently. It's not a stock I look at usually, so wow. And has corrected. It's come to an important support, I would say, that is around 560, 200-day moving average and all that stuff. So again, technically, I think at a important level. The one thing, I mean, the whole set of stocks that we're discussing now and next, Oil India, BPCL, HPCL, all that is the thing about these stocks is the subsidy burden that they had for the oil marketing companies when diesel and petrol were subsidized. Now that having gone, the only subsidy that I know of which is really left is the LPG gas subsidy, right? And that will probably eventually go as I think there's already some move on it. So I would say that from a long-term perspective, these are companies whose balance sheets are really going to improve quarter on quarter. If there is one big thing, then I think it's this private oil marketing companies, Reliance, SR. I don't know who else is there who would probably get back into the market, and they are the ones who would take away market share, and that should be a good, interesting fight. Shell is there, of course, but I think given that there is government support and the long-term energy needs of India, from a just a long-term fundamental perspective, I would really say buy this. BPCL and BPCL especially, and HPCL also is something that's been strongly recommended in the IMRs in the last several weeks, months actually, and they've done pretty well. And just coming back to Oil India, therefore, it's come to an important support level at around 560. It jumped up to 590 now. Again, volumes would be a concern, but again, this could probably be because of the short weekend, on the verge of an MACD crossover. Okay, on the verge of an MACD crossover. So technically, I think good place to buy. You have a good stop loss below 545, and once it breaks 610, then 650, 660 is a distinct possibility. That's the life high which it created. Actually, let's see what's the closing basis life high. Okay, on a closing basis, this is your life high. So it should break out, in my opinion. Again, this whole down move has taken about 5-6 weeks. Up move could take longer. Look at this, what happened. It just went consolidated for 2-3 months before it went up. So you're going to have a lot of patience, but I believe the patience will pay off. And once it crosses 650, 660, then 700,000 by the end of next year, quite possible. Okay, so that's Oil India. Now let's look at HPCL, then we'll look at BPCL. So Hind Petro has really finding some interesting ones this week. Not broken the life high and on the verge of making a triple top breakout. Please buy this on Monday. Okay, Hind Petro, weekly chart. Volumes, okay, very nice, picking up in several months now, including this month. Including this month, even though the month is not yet over, another week left. This is definitely looking good. Okay, I think in Petro is going to make a new life high this month. If there is one trade opportunity short term next 1 week, 2 weeks that we have found, I think this is the one so far. Hindustan Petroleum. Go buy FNO however you wish, and I think you should be sitting on a pretty decent profit end of the expiry, or at least middle of next week, next month, sorry. Really good support at around I would say below 377. Okay, below 377, really good support. It's just a question of it breaking out below above 550. The whole of this month it has actually not corrected the way the rest of the stocks have, which is telling you relative strength. And then once the this new week started, it went back to almost a new life high. I would strongly recommend buying this. Once 550 is out, 600 could definitely happen. The charts are looking really nice. Good. Traders can put a stop loss below 484. Investors should put a stop loss below, I would say, 427. 550 minimum target, 600 quite distinctly possible in the next 2 weeks. And I would stick my neck out and say that I think by this time next year, this stock could easily be at 900, even $1,000. Okay. Good. BPCL has made new life highs, as you can see. If we were to sort of look at the opportunity in Hindustan Petro and compare this to exactly what has happened in BPCL, then I hope the message is driven home. And as far as I'm concerned, I think if we end the IMR here on this note, we would have really done a good job and a profitable one. See, this is what happened. 2010 breakout, 2012 breakout, sorry, life high, double top actually, and then 2014 breaks out, goes sideways for some time, 450, and then it goes to 700. All right, so that's not a doubling, but you know what, it's on the way to still keep going up. So it goes up, consolidates for 3 months, again goes up, comes down. This is another consolidation. So for those of you who know Do theory, the sort of pattern that you're getting, a sort of bowl, etc. Unlike many of the other stocks that we have seen, MACD is pretty positive. Others were either going down or were on the verge of a crossover. This has already done a crossover, which is good. And when it goes back up, almost does another life high, though not yet there. So BPCL will go to 750, and then for all I know, 1,000 rupees by the next quarter, next 3 to 6 months, and HPCL will just go sort of in tandem. So the lesson to take home is what happened when this multi-year breakout happened. Actually, HPCL is, I would say, even more significant because it's going to do that lifetime now. So a 50% increase in HPCL in the next 3 to 6 months is distinctly possible. So guys, especially you fellows, mentorship fellows, go back and do some FNO strategy on this. All right. That's it on this list. Let's do Coal India because it is in the center of our coal thing. So this is a full livestock, the entire history of this trading. Coal India is there. So I just have to put this here. Okay. Okay, so double bottom 335, 200-day moving average looks like it's taking pretty good support. Competition for Coal India from private sector is at least 1 to 2 years away. So till then, sort of a monopoly thing. Of course, they will try and get their act together now, I think, I hope. Modi or whoever is in charge should appoint a really go-getting CEO for Coal India, and magic can happen. The sort of reserves and potential the guys are sitting on. Yep, Coal India, excellent stop loss at around 327. Very likely to break out about 365, 370, and once 380 goes, 420 is a distinct possibility. Okay, so and then after that 450 and 500. To me, this looks like a secondary correction from 240 to 420 to 340, and then again primary trend, secondary higher top would definitely be made. So Coal India I would put it as a buy right now. Okay, next. Sid, thank you for that. I missed that thing on Reliance. Reliance has been denied the new price till it makes up the supply shortfall. Yeah, good point. I read it and I forgot. Thank you for the reminder. So that's going to be a dampener on Reliance, but you know what? They'll find a way. So they will, if they have to, they will make up the supply shortfall, and then you have to watch out for that event news. When the Reliance does make up for the supply shortfall, and suddenly Reliance then starts to move because now they benefit from the new prices. Okay, so Pharma, Biocon, Cipla, Lupin. Biocon. Okay, so Biocon making new life highs. That's really interesting. Though not in a, technically speaking, a very regular fashion. It's going up. Wondering whether anybody can see a pattern here that you want to comment on. Yep. So whether you're sort of getting a head and shoulder pattern there, not very healthy. Okay, so I think we just watch out and review this later. So might be something to sell rather than buy actually, and really nothing to write home about. Plenty of resistances on the top side, again stuck between various moving averages. So let it play out and then we will review. Cipla. So Cipla, as you can see, when you're looking at the pharma index also, you saw this big up move. So Cipla being a pretty large component of pharma industry. 450 to 650 in 2 months, fantastic move. And sort of, if you look at this part, doing a similar uh, pattern here, it seems to me. Okay, and if it breaks out, then great. So you've got this, and then a breakout perhaps possible. But like I said, a lot of the pharma companies have done these fantastic moves. On the weekly chart, this probably look like a flag or something. Yeah, almost, good move on the volumes, consolidation clearly happening. If you talk about flag 450, 200 bucks, 650 plus 200, 850, quite possible that this could happen. On the weekly chart, as you can see, nice lower shadows, lots of buying at lower levels, and this week has been a nice Marubozu candle. 630 goes, then who knows, another 200 rupee up in say 2 to 3 months. That's almost 33, 35, 40% return. Definitely a good pick. Sid, can you just quickly look at the histogram for pharma? Thank you. And Lupin. So the up move in Lupin sort of a similar story as in uh, what you saw in Cipla, and technically almost the same pattern before and after the up move of the last several months. Volumes not there the way they were in Cipla, but the consolidation is going on, and has to break out above 1400, and if it breaks out above 1400, then first resistance will be 1500, and then after that maybe 1750, 2000, who knows. I think Cipla looks technically better than Lupin does. Okay, all right. So okay, that's the pharma list. What next? Okay, now just tell me whether it's expensive or cheap. How is it? Okay, so pharma looks okay. I mean, definitely fundamentally looking like a decent, not too expensive buy. You could consider going into it. So look at Cipla for sure. Okay. Okay, so let's look at this set of banks, and then we'll hopefully end for the day. So we'll IndusInd, SBI, Axis, ICICI, Bank of India, and Federal Bank. Okay. So let's look at the PSUs first. We'll look at Bank of India. Okay, so Bank of India definitely nowhere close to its life high, around 570. Okay, and 200. Okay, so technically it has to break above this level for it to really be able to move up. Quite a lot of resistance at 300 rupees. So I think it's just better to wait and watch till it breaks out of 300. I would not be too much in a hurry to buy it. You can see that the volumes haven't picked up. MACD, RSI, nothing giving any sign of strength. Unlikely to break below 200. So if it does come down, that I think around 200 would be a good time to buy. 260 is still another. 200 is another what, 20% lower than this. But definitely a technical breakout above 300, 305, 310 should be bought with a target of 380, after which it should easily rise to 450, 500, and then gradually a life high. That all this probably, in my opinion, will happen only as RBI sort of goes easy on the monetary policy. So that's Bank of India. Then coming to SBI. Similar story like Bank of India. Definitely nowhere close to its life high, but I think chart wise looking healthier than Bank of India. I'm sure some of us will agree. Okay. So really good support at around 2400 or 2350, I would say. Again demonstrating how if you can identify good levels and see how this level from 2007, 2009, etc. is a level that has held several times this year. Very unlikely that this market is going to, the stock is going to go below 2300. You could buy this, I think, and sleep in peace. You see that other stock had really Tata Steel, I think. Which was the other one? I'm forgetting. I did so many. Okay, somebody will have to go and review this recording. Uh, so really at a nice place. I would say just consolidating. There is another positive divergence on MACD there, right? So MACD here at minus 41, here it is at minus 28, price here is at around 2350, price here was around 2350. Okay, so yep, I think in all likelihood set to go up once it breaks 2775, then 200-point move quickly from there, and then after that I think it'll just head to its life high of 3500. Okay, yeah, I would definitely put my money in SBI rather than Bank of India. Okay, so that's the public sector banks. Now then let's look at the private sector banks. So just going with the list as has been put up. IndusInd, so IndusInd Bank, so first of all, the first thing to note, earlier we were talking about this difference between private and public sector banks. You're going to see a lot of the private sector banks have just been consistently making life highs, which the public sector banks have not been. And you can see this in IndusInd already. I think last week did we look at it? No. So when, or it did, I don't know. Kept saying it's another stock to buy for several months now. It's gone to 700. I believe this stock is just naturally heading towards 1000 rupees. Any correction should be used to buy into this. It's, look at it, even in September went sideways, not going down as many of the other stocks have, and many of the public sector banks have. Just demonstrates a sign of strength. 600, very, very good support. 700 is the next target, and after 700 may consolidate there for some time, but it's just going to be one of the natural beneficiaries of interest rate reductions and all of that. It definitely should be, can be a part of your long-term investment portfolio. Axis Bank, so this is another one which has been making life highs. Okay, you can see there again 2010 peak and 2013 peak was there, and then just kept going up. After it broke out and then has consolidated, so it's gone from 320 to 420. Probably done not as well as IndusInd has, relatively speaking, but still it's another buy. June, July, August, sort of September also consolidation, and I think just have to be patient with stocks or banks like this. Really good support at around 370. You can use that as a alert, stop loss if you're a trader. 500 next natural technical target, and after that who knows, higher. Okay, next is ICICI. ICICI has only now been able to make a new life high from its 2008 peak. Okay, so that's one thing about ICICI. It's been a laggard amongst the private sector banks. Having said that, there are two ways to look at this. Don't invest because it is a laggard and you say fine, leave it, or you've got something like IndusInd and HDFC and Kotak and all of that. So that, on the other hand, you say, you know what, maybe the move is just starting. Those have been moving for quite some time. This move has just started. It actually went up, came back and tested it. Lovely place to buy, 1450. Now going back up, and again, volume is not there, but technically otherwise okay. And 2000 rupees on this stock 6 months down the line is distinctly possible. So if you're looking for strength, then the strength in this is just beginning, and it is probably bound to get much stronger. In the other private sector bank, the strength has been there, and it's a question of how long the strength might or might not last. But all said and done, going back to the start of this discussion, the whole point that the liberalization, economic growth, infrastructure growth, plus most importantly RBI on a declining mode, if that happens, then you could really see a big re-rating of the banks. Okay, so ICICI Bank, definitely a 2000 rupee stock in the next, I would say, 3 to 6 months. Stop losses, if you really need them, that is. As a trader, below 1525, and as an investor, I would say below 1325. Next, Federal Bank. So another which has made a new life high. So you can see this is in the. I think if we did all the banks at some point, you could basket them into 4 or 5 categories. I would put IndusInd. What did we do today? IndusInd, Axis, and Federal in one basket. I would probably have 2 baskets for SBI. Sorry, for public sector banks. Some that you could look at, others that you just might as well ignore, and maybe 3 to 4 baskets for private sector banks, as in different thematic approach, sub themes to the whole thing. Okay, that's just a train going by for those of us who don't know. I almost live on the railway tracks. So Federal Bank making new life highs, went sideways for 1, 2, 3, 4 months. Again, want to highlight one point here. The value of patience. You really need to have that patience. For 4 months, the stock did nothing, sort of. But many other stocks in the market would have. Do you hold on to this? Do you get out of this, reinvest somewhere else? You get back into. These are not easy questions to answer, and that's why you need to really have your strategy really laid out quite well. Otherwise, you will go all over the place, right? Okay. So anyhow, Federal Bank, I think the next natural target is just 150. It's very likely to happen. Could come back to 135, 130 for a retest of that. But 150, and then after that 175 and 200 are, I think, is waiting to happen on this in due course of time, right? Okay, so that's it. That's the list of banks. We're almost at 11 p.m. I really think we could stop here. What else is there that we would like to discuss, Balki? Can you just quickly put out some sectors or stocks, or anyone else? Okay. HDFC, so as you can see, it's made a new life high earlier this year, but really not been able to keep the stock up there. Seems to be something amiss in the stock. There was this rumor about HDFC Bank uh, uh, sort of merging, which didn't happen. But again, interest rates come down, real estate becomes more affordable. This is the place to buy. But again, you've got LIC Housing Finance, you've got a host of other housing finance companies, which actually we should look on as a basket and see, stock wise, which would be the ones to buy. So yeah, looks like a secondary correction to me. Okay, a deeper one definitely, and it's a question of the stock getting used to, I think, 1,000 rupees, which of course is now reclaimed that is 1,031. Could go up, but I think technically you've got your IndusInd, Federal, all that doing better. And HDFC should not really be confused with banks. We're more a house finance company than anything else. Arvind Mills. So Arvind Mills, again, the uptrend seems to have re-established. Important that MACD Probably next week it will do a crossover, I think Monday, Tuesday, Wednesday, and after that the upside momentum should, in my opinion, pick up. Really stuck there, as you can see, at that 300 mark, but lots of good technical support on the downside. 270 I think is the worst case scenario from a trader's perspective, and really it's just a question of going back to its life high of 335. When we looked at it last, if I remember correctly, I think from a book value perspective it was reasonably priced, or was it expensive? I don't know. And that the big story I think on Urban Mills is really, the breakout from its life high here at around 225. Of course it's at 300 almost right now. So, and then it's corrected itself, but I do think that this could just be one correction amongst many to come, and the stock has a long way to go, both technically and business wise, and probably fundamentally that way. Okay. Yep. All right, so anyone else? Nope. Having lunch, dinner, breakfast? Not sure. Okay. Please give it 10 seconds and yeah, Balki, have dinner. Alright, so thank you all for joining the session today. I hope it's been useful. Would love to have your feedback. Request you to take some time. I know it's very precious, and write in an email with your inputs, with your experiences. Maybe you can post it on the BIC Yahoo groups for the benefit of everyone else. I mean, honestly, we really need to get more people into the markets. We really need to get more people learning about the markets. We really need to get more people making money from the markets, right? So with that, there will be a recording of this available maybe by tomorrow evening. So if you're interested, write in and let others know, and it will be available only on request. Okay. So thank you. Happy Diwali. Hope to see you again for a free Muhurath session next year. And in the meantime, make lots and lots and lots of money. Thank you. Good night.